The purpose of this video is to give viewers a better understanding of the indirect financial compensation under human resource management, which also known as employee benefits. My name is Agnes, student of Northern University of Malaysia. First of all, what is the meaning of indirect financial compensation? Indirect financial compensation is all financial rewards that are not included in the direct financial compensation, which will mostly take about 30% of the total compensation costs. The following is the components of compensation. Undeniable, many organizations have gradually realized that they have a responsibility to provide employees with adequate benefits such as health, safety, security, and so on. In the early days, companies generally only deal with financial compensation. As time changed, non-financial compensation has also been taken into consideration. Non-financial compensation includes a person's satisfaction from work itself, work psychology, or work environment. However, this video still focuses on indirect financial compensation. Indirect financial compensation can be divided into two parts, which is legally required benefits and discretionary benefits. Let's talk about the legally required benefits first. First and foremost is the most expensive employee benefits, that is healthcare coverage. In the past, companies were free to choose whether to provide employees with healthcare plans or not. However, after the passage of Patient Protection and Affordable Care Act (PPACA) or ACA in 2010, companies must provide employees with affordable healthcare options. Failure to do so will result in high fines. The company can choose one of the following three forms of healthcare plans. Fee-for-service plans is a reimbursement-based payment of benefits in the form of cash benefits after employees receive healthcare services. This includes hospital expenses, surgical expenses, and physical expenses. The managed care plan emphasizes cost control by restricting employees' choices of doctors and hospitals and provides employees with medical care plans in the form of advance payments. Consumer-driven healthcare plans refer to the goal of helping companies maintain cost control while enabling employees to make more choices in healthcare. In order to fully protect the interests of employees, legislation pertaining to healthcare is also an important part. Due to high medical costs, such individuals without medical insurance are vulnerable. COBRA gives employees the opportunity to continue their coverage temporarily, otherwise they will suffer losses due to dismissal, layoffs, or other changes in employment status. The Act applies to employers with 20 or more employees. Individuals can maintain their own insurance and the insurance of their spouse and dependents for up to 18 months after termination of employment. OWBPA is an amendment to the Age Discrimination in Employment Act, which imposes other restrictions on employer welfare practices. HIPAA is to ensure that individuals, regardless of their health status or claim experience, can obtain insurance at any time under the health plans of their subsequent employer. This legislation can also protect the transfer, disclosure, and use of healthcare information. PPACA is based on the idea that when more people have health insurance, in addition to the elderly and sick, there are also young and healthy people whose risks will be dispersed and costs will be reduced. The Social Security Act of 1935 established the pension system, and the Social Security Bureau. Subsequent amendments to the law added more comprehensive protections such as disability insurance, survivors benefits, and Medicare. Unemployment compensation provides workers whose jobs have been terminated through no fault of their own monetary payments for up to 26 weeks or until they find a new job. The purpose of unemployment benefits is to provide time to unemployed workers to find a new job. Workers' compensation is for expenses incurred due to work-related accidents or illnesses, and also provide a certain degree of financial protections for employees. Next, come to discretionary benefits. Vacation can give employees the opportunity to rest and to improve future work efficiency. A certain number of sick days are allocated to employees each year, also for the pay time of banks. But the difference is the sick pay is for the sick purpose, but for the pay time of banks is for all purpose. Parental leave due to family reasons, including family member illness, childborn, and others. Sabbaticals means to leave the organization temporarily in a pay cut. Voluntaries means taking leave to support a meaningful cause, and other types, for example, perform civic duties, jury duty, voting time, and so on. Life insurance provides cash benefits when the insurer dies. There is two types of life insurance. That is term life insurance and whole life insurance. Disability insurance is to give workers compensation to protect employees from work-related accidents and diseases. Some companies also provide more comprehensive additional protections. ERISA of 1974 stipulates the minimum standards required to qualify pension plans to receive preferential tax treatment. There is qualified plans which meet that minimum standards, while non-qualified plans are pension plans that do not meet at least one of the minimum standards. Vending is one of the minimum standards. It is also referred to the inalienable rights of employee retirement benefits. There is two options. Retirement plan design include defined benefits plans, defined contribution plan, and hybrid plan. A defined benefits plan is a retirement plan that provides participants with a fixed benefits throughout the retirement period. A defined contribution plan is a retirement plan that requires an employee or an employer to make specific contribution to a retirement or saving fund established for the employee. The most common is the 401k plan, which defines a contribution plan in which employees can provide the maximum allowable income. A hybrid arrangement may be the ideal method to retirement planning. The cash balance plan is a plan that includes both a defined benefit plan and a defined contribution plan. Employee service benefits include child care, educational assistance, food service or subsidized cafeterias, scholarship for dependents, relocation benefits are the transportation and temporary living expenses paid by company for household suppliers, including all or a part of the real estate costs related to the purchase of a new house and the sale of the house previously lived in, and also domestic partner benefits and same-sex marriage and others benefits. As I said before, in addition to focusing on financial compensation, Companies should also focus on non-financial compensation, focusing on improving the flexibility of the workplace and some personal issues that are not conducive to the work of employees may be the key factors in attracting and retaining employees. Flex time is a practice that allows employees to choose their own working hours within certain limits. A compressed work week is a work schedule that allows employees to complete their work in fewer days than the typical 5 days work week. In job sharing, two part-timers assign the responsibility of a job in some agreed-on manner and get paid based on their contribution. For two in a box, some companies give two executives the same responsibility and the same title and let them to discuss how to divide the task. Telecommuting is a work arrangement where employees can stay at home and use their computer or other electrical device that can connect them to the office to perform their work. Part-time work are people who do not want or need a full-time job. Professionals with higher education usually choose part-time work opportunities other than full-time. So the recent economy recession has caused many workers to take part-time jobs too. The diagram shows the example of illustrations of the flex time.